thanks to the Riscan network. So I don't know if Jana, if you are connected already. Oh, there is an echo. If you can please mute yourself, so we don't have this type of issue. Perfect. Thank you so much. So the Riscan Action Network is a knowledge platform on emergent risk and extreme events, and they have been kind enough to relay our own workshop on their channel. So thank you for that. So there is still people that are connecting right now, maybe waiting for the other to join. We have asked some of you to share their expectation, and actually we received a lot of comments, which most of them are really aligned with what we want to do. So just displaying an overview. Learning, of course, is a key expectation for you and for us, also learning from you. So this session will be interactive. I will explain that just after. Gaining insight, inspiration on the insurance market. And of course, we're going to talk on adaptation, climate risk, updated news from the insurance businesses. We're going to tackle just a little bit NBS and insurance product, but this topic will be definitely a focus for further session. Idea is to share on innovation, gaps, solutions. Just one last remarks that were shared in advance. So we had some of the participants who asked how this will contribute to increase people resilience at macro, meso, micro level. Just to note that PIISA is focused on European market, but we do hope that it's important to keep these links between EU and developing countries, and this will hopefully feed also these questions. Well, I don't know how many we are, but I think it's time to start because we have a lot to say.
Yeah,
so I will be your host for today. Okay, I will be your host for today. My name is Ariane Kaploun. I'm working at AXA Climate, leading the nature-based solution team, and I will be co-animating the session with Hilpa from the Finnish Meteorological Institute. So Hilpa is a research professor at the FMI, and she's also the coordinator of PIISA project. So as I mentioned, we want this session to be interactive. So you see on the screen a Menti code. So either you can just take your phone and scan the QR code. So in around 30 minutes, you will see pop-up questions on your phone, or if you do not have a phone or not working, you can also go to menti.com, enter the code that you see, and follow also the questions during the whole hour. When you connect to Menti, you will see an open Q&A button. So during the whole hour, you will be able to send your questions, and we will try to answer by the end of the session. Okay, so I think it's time to really start now. So we would like to start with a keynote speaker. So I don't know if Paul, you are connected and ready. So while you switch on your camera and open your mic, so I will introduce you. So Paul, you are a lecturer in environmental economics at the University of York, where you work on many areas from building resilience to climate change and extreme weather modeling. So we'd be happy to hear you introducing work, Paul, if you are already with us.
I should be. Hopefully everyone can hear and see me. Yes. We're not a Teams institute here at York, so I see people have thumbs up, so I'll assume it's all good. Right, so it's my lovely opportunity here to introduce the idea of why climate insurance is a very useful tool and why we need insurance to try and help build a better and more resilient future, given the huge range of climate impacts are only going to get in one direction, sadly, which is worse. Insurance in that respect is a great, useful tool because quite a lot of the time there are risks and threats that one single individual can't bear the consequences of themselves. But in sharing that risk between a large number of people, we can become in a much better position in order to actually absorb those potential impacts, right? It's a simple case of, would you rather lose 10,000 euros or 50 euros? By getting a large number of people to chip in to help bear and share those costs, we can, excuse the pun, weather the impacts of growing climate risk a lot more feasibly. And that brings a whole range of other opportunities, because by doing so, we help to limit the, oh, sorry, words are escaping my head. We help to limit the degree that these extreme events can disrupt society by helping people get back on their feet quickly, so they can start the recovery process with a quick injection of money. Or we can help minimize business interruption costs by helping people still pay employees while the business is closed, or replacing lost and damaged inventory to help keep things moving forwards in a way that helps us keep a stable economic environment, which makes life a lot less complicated in other ways. But then on top of that, insurance isn't just a great mechanism for helping people recover. Because insurance comes at the long end of a chain of necessary investments in protective infrastructure, planning, forethought of what's going on, we have to think about the entire risk generation chain and where we can step in order to limit risk at various points, so that we can provide a product that people want to buy, people can afford to buy, and then have a useful input in managing risk. Because if we look at most of the fire safety rules that we have, that originated out from insurers coming up with rules to say, this is what we're going to do if there's a fire, this is how we're going to work together. And we're increasingly can see ways that that can play a part with climate risk as well, whether it's from having input into, say, how building codes are. I'm muted, apparently. Right, so hopefully I've unmuted myself. I don't know what the last thing I said was, but it was.
We can hear you. Please, Paul, continue. It's fine.
Excellent. So the next thing is about the risk reduction ability to incentivize you at an individual level. As a policyholder, you can receive incentives to change how you use your property, to proactively think about how and what are you going to do when there is a disaster looming, in various ways and shapes and forms that can come in. Even though insurance has a great degree of potential because of that ability to work at multiple levels and multiple stages of the disaster risk management cycle, we still have a series of challenges that need to be overcome, especially as climate gets worse into the future. One of which is going to be getting people to actually buy insurance. Depending on how it's provided, different countries across the world do it differently, but there is always going to be that gap, and how do we try and minimize it as much as we can, right? We've seen a lot of work to do it with private individuals and homeowners, probably less so on the whole to do so with companies and businesses. We've also got problems of insurability moving forward. You know, a lot of extreme events tend to be clumped in certain geographical areas, which means with climate change intensification, are those policies going to be affordable in the future? Will we be able to correctly diversify that portfolio of individuals across a country, across the world in a useful way? And as I think I'm running out to the end of my time, the last bit is going to be, if we want to send signals to the individuals most at risk through their insurance policy, we still have to figure out what is the correct way to send that signal, right? We often see a lot of talk about how premium discounts might incentivize people to actually employ additional risk reducing measures. But if you're only able to offer a discount of, say, 100 euros a year, maybe that is not actually enough to make someone want to do it, even though it represents a net benefit over their lifetime. Maybe we have to find another way of tangibly sending that signal in a way that is affordable to the insurer to both see that someone has done it and what they're doing is actually going to work. And I think I'll stop there because I think I have used my time there. Thank you for listening.
Thank you so much, Paul, for agreeing to be the inspirational beginning speech for this session. And it's perfect that you mentioned this link between incentive and insurance, because this is part of PIISA. So I think now it's time for dear Hilpa to actually explain a little bit what is the objective of the project and what question will be or are already tackled. So Hilpa, if you want to please start the PIISA presentation.
Thank you so much, Ariane, and thank you, Paul, for the very good keynote talk already. And all of you, you should know that we have 101 listeners at the moment, or 100 at least. So PIISA, we are aiming to develop and deploy a range of insurance innovations to cover at least 50% of losses attributable to climate change effects in Europe. So this one sentence means very much. We need to work with the extremes. We need to work also with the attribution of extreme events. The project really hopes to support households, firms, public authorities to set up adaptation and create adaptation promoting conditions. So these are the things that are in the core of PIISA. Next slide, please. And I'm thanking Stefano for this wonderful slide, and also Ariane and your team. So these are the PIISA activities that we have in our project. So they are also project work package related. And today we really talk about the state of the art and opportunities for climate risk insurance. The review of insurance protection gap today, and tomorrow review of actuarial risk modeling. And also we are doing a lot of surveying. We want to survey awareness and of attitudes toward climate insurance, this willingness to buy. So this will happen, for instance, during the next 6 months. We will know much more about the attitudes, but we also have already some results. Then we work with climate services, harmonizing these. We need the climate change services, not only the climate services dealing with the past. So we are reviewing adaptation and climate services for insurance and risk indicators from existing portals. We are also co-designing, looking at what could be done better with somebody who is interested in joining and designing these together with us. We especially want to develop extreme climate indicators for the convective weather and drought. And we work with this attribution of extreme temperatures theme for the heat waves. And of course, as also already said by Paul, we need to also think about sharing approaches. Thus, we combine the insurance thinking and knowledge, and then the climate services thinking, and think about what to share between these two themes, and also how to share with the people. For the pilots that we have already done, we are working with the green roof insurances, soil stability risks and home insurance, then agricultural insurances and new concepts, also the seasonal climate services, so that you can prepare a little bit in advance. That will be for whole Europe. Then we deal with forest insurances against biotic and abiotic risks. For instance, the bark beetles are in the interest of ours. And we work with the wildfire insurance and adaptive actions. But that's not all. We are also having loops and also feedback loops for ourselves and the expectations that we have. So in our communication team, we are actually serving ourselves. Are we happy with what we did? How can we transfer the information from the innovation rounds to the next rounds? And how can we really integrate the need of the society or the policyholder, so that we can also take that into account when we develop further? So next slide. We do at the same time, when we do investigations and reviewing of science and climate services, we also review these existing service portals that are relevant in risk sharing. For instance, this Risk Data Hub is very relevant. We are going through that. And we are also working a lot with EEA, the European Environment Agency, in our other activities, actually. So we work with reporting and also reading these reports and integrate the knowledge to our piloting. Next slide. And this is just to present how we started this project. So we focused on atmospheric circulation, precipitation, temperature, soil moisture, and wildfires. And the regions you see, so it covers from south of Europe, the central part, and then northern part. And we want to pilot with many more areas, and we want to collaborate with many more projects so that we could actually widen the scope and scale more. But let's go still with one slide to our agricultural project or a pilot. And the next slide.
Yeah, and maybe just before moving on to the illustration with AgriPilot, so we already received some questions. And so for the first years, we already have local partners. So this is the names that you see on the bottom of the slide. But for the future loops that Hilpa mentioned, we're happy to engage with other local partners. So if you know this is something that could interest you, please don't hesitate to write to us either on the chat or after. On the PIISA website, we have a contact form, and we can see how we can collaborate in the future. So sorry, Hilpa, please continue with
that was really good. I just tried to save time so that we hear the results. But anyways, thank you for already being interested in joining. And this is one of the examples how we work, what we do. So when you join. So for instance, in Finland, we have local Tapiola, the insurance company who have their clients. And we planned, because that was something that we needed to do very quickly in the project, to start right away after the project started, to map what actually the farmers, the agriculture insurance holders, what they really want, what they know, what is their risk, how do they feel. So that was developed so that we did a survey, mapped the awareness of the climate change impacts and risks. So we know the level of knowledge, what the farmers have, and then we could also find out how aware of the difficulties they are and how aware of these insurance options and possibilities the farmers are. And there is actually a result already. There are people who want to join and test parametric insurance. And this is, again, another topic. It's not allowed to sell any parametric insurance at the moment in Finland. So we work with the policy level and the legal issues as well. This is just one example how we start. We map about the awareness, and then we map what are the next difficulties, and then we go into testing later. So this is about how we do. And then I think it's the logos. So we have a wonderful consortium. I'm thankful for it. And we can move on.
Okay, thank you so much, Hilpa. So now the proposition for you is to actually present you the first results. So as a reminder, the topic of today is challenges, barriers, and opportunities to reduce insurance protection gap and accelerate adaptation. So Stefano will present you the first results. So Stefano, you are a doctor in economics. You're currently a postdoc at the Euro-Mediterranean Center on Climate Change. And you've been leading this work for PIISA since last June. And now I let you the floor.
Thank you very much, Marianne. I'm trying to share my screen. Can you please let me know if you're able to see it?
Yes, we do.
Okay, perfect. So thank you very much, everyone, for joining today. Our task, I'm the leader of task 1.1 of the work package 1 of PIISA. Our task aims to review the supply and demand for climate risk insurance in Europe. This is achieved through a systematic assessment and mapping of the various national climate insurance systems across European countries by highlighting recent trends that happened in these systems and by stock taking the drivers for the current insurance protection gaps, as well as the opportunities for innovation and adaptation enhancing insurance. The final objective of this task is to collect a pool of knowledge, which will then enable the other work packages within the PIISA project to effectively conduct their innovation activities. Our outputs are based on two main strands of methods. First of all, we conducted a literature review on the climate insurance demand. This consisted of a systematic search where the key elements and principles that are relevant for our topic were linked in a search query and then fed into two search engines, the two search engines of Scopus and Web of Science. This was then complemented by an AI-powered search conducted on Research Rabbit, where we provided the AI tool with a list of relevant documents, and this returned us a pool of thematically linked references. And finally, we've also added some extra documents upon writing the deliverable. These are mainly from the gray literature, which is not picked up in the systematic search. They are documents that we source ourselves, or they are cross-references that popped up in the documents that were sourced from the systematic and AI-powered search. The second method is a mapping of the European climate insurance market. This combines the results that emerge from our literature review with the information that is provided by the European Insurance and Occupational Pension Authority in its Insurance Protection Gap dashboard. And today, as Ariane mentioned, we're going to present you the first results of our endeavors. This is a snapshot of how the review process was conducted. I won't go into the details for each of these passages. However, if you'd like to know more, I'm more than happy to provide clarifications after this presentation. So to start from with the mapping of the European climate insurance market, we've created several maps that take into account the most common hazard types in Europe and the recent trends, the characteristics of the national insurance systems, and the penetration rates in various countries for various types of hazards and sectors. Today, unfortunately, due to time constraints, I don't have time to show you all the maps that we've produced, but I will focus on a subset of interesting cases. But a complete and detailed overview will be available in the final version of the deliverable. So to kick things off with the climate insurance systems, as we can see, there is a considerable variation for each of the characteristics that we have considered, which are the type of supply of insurance, the national requirements for insurance, the type of premiums that is included in insurance policies, and what sort of governmental relief is available in case of a disaster. Various countries use different combinations of these categories, and this returns to situations in which many different systems coexist in a European context. To highlight a few of the most interesting findings, it appears that the majority of the market, the majority of the schemes, tend to be market-based, and in these cases, the take-up of insurance is voluntary, and the premiums tends to be risk-based. For those countries that are characterized by some form of public intervention or a solidaristic schemes, there tend to be regulated premiums and some forms of requirements for insurance uptakes. However, there are exceptions in both of these cases. And finally, we see there are three main forms of governmental relief, either through dedicated public funds or through ad hoc interventions that are decided on a case-by-case basis, or there is no relief at all. Also, in this case, within each category, countries tend to follow different approaches. And here we report the penetration rates for 4 types of hazards, namely wind, wildfire, coastal flooding, and pluvial faulting, and 2 sectors, the private sector and the commercial sector. Also, in this case, we see considerable variation in penetration rates for both hazards and sectors. In general, there seems to be a geographic component determined by the hazard that is mostly present in a given geographic area. So, for example, coastal coverage is more diffused among Atlantic countries. The countries that are characterized, another thing that appears is that the commercial sector tends to have higher penetration rates in those markets that are characterized by voluntary uptake. And on top of that, Southern and Eastern European countries have generally lower penetration rates for all types of hazards and both sectors, with the exception of Spain, which has a solidaristic public-private partnership scheme, where there is a mandatory requirements to include climate coverage in other insurance products. So some interesting facts emerge from our mapping exercise and that I would like you to take away from today's presentation. First of all, most of the penetration rates that I presented here and that are reported in the EIOPA dashboard come from qualitative estimates and approximations rather than precise figures. And this is often due to limitations in the sourcing of this information. Second, those systems that are characterized by some form of public interventions usually have higher penetration rates, and they are characterized by some form of solidarity scheme through the cross-subsidization of premium. Third, the mandatory requirement, the legal compulsion, better, to insurance uptake does not necessarily entail higher penetration rates, for example, due to limitations of enforcing these requirements. In addition, it seems that linking insurance to other products, for example, making it a prerequisite for the mortgage, leads to equal or better outcomes in terms of incentivizing uptake than legal compulsion. Then southern states with voluntary systems, as I mentioned, have generally lower uptakes for all hazards and sectors. However, in recent years in these countries, there is a tendency to introduce some forms of requirement in an attempt to incentivize and stimulate uptake. Then in those countries where the ex-post disaster relief is provided through ad hoc funds, these funds and these interventions tend to reduce the penetration due to the so-called more charity hazard. And finally, as of today, risk-based premiums do not appear to be particularly effective at stimulating risk reduction investments by themselves, but they should be complemented by other forms of measures. So to conclude this first part, what emerges from our review is that the systems that currently perform better at reducing insurance protection gaps are characterized by some or all of these features. They have some forms of premium cross-subsidization, either through fixed or flat rates. They have some form of public intervention in the climate insurance scheme. They have some forms of requirements for insurance uptakes, and they do not use ad hoc interventions for disaster relief. Let's now move on to the results of the literature review, and we start off with the demand drivers of the insurance protection gaps. These are some of the factors that we have considered in our review. The charity hazard, which I've already mentioned, is the phenomenon for which the expectation or anticipation of receiving assistance by a third party, usually the government, crowds out the incentive of individuals to protect themselves, thus reducing the demand for climate insurance. Affordability relates to the cost of insurance and more specifically to the ability of paying the insurance premiums. Even though this is an intuitive concept on papers, there are actually several ways in which affordability or unaffordability can be defined, and these tend to lead to different conclusions. Risk aversion refers to the tendency of people preferring situations of certainty, and ambiguity aversion to the tendency to prefer situations in which the probability of occurrence of a certain event is known. Both of these are assumed to have a positive impact on the demand for climate insurance, since insurance should reduce uncertainty by ensuring that some form of compensation will be received in case of a climate-related loss event. The status quo bias refers to the tendency of individuals not to change and stick to the status quo, even in those situations in which changing would lead to better outcomes. So this can contribute to maintaining the protection gaps in situations in which the status quo is characterized by low penetration, but also to reduce the status quo when there are high penetration rates. The availability bias is the tendency of people's evaluations and decisions to be influenced by the ease to recollect having had similar experiences. This means that when people have infrequent experiences with climate extremes and with needing insurance coverage, this can reduce the demand for insurance, whereas when there is frequent experience, this can have a positive effect. Herding means that individuals tend to base their decision on other people's behavior, especially in situations of uncertainty. It also often involves relying more on the information that is provided by one social network, like family, friends, and neighbors, rather than on official sources and expert opinion. Also, in this case, depending on the social network, it can have a positive or a negative impact on insurance demand. The level of concern heuristic relates to the fact that climate events, and especially the more severe ones, are very rare events, and therefore people may perceive the probability of this happening as so low that it is not worthwhile to insure against them. And finally, moral hazard in this context refers to the tendency of considering insurance and other forms of risk reduction measures to be substitutes. So agents who have implemented risk reduction might be less inclined to seek insurance coverage because they think they are already protected, and vice versa. Having explained all these various barriers and how they are supposed to affect the demand for climate insurance, let's see what emerges from the literature. I don't have time to discuss each one of them in detail, so I'll focus more on general principles and on some interesting findings. In most of the cases, it appears that the effect is in line with what is expected. So, for example, when governmental relief is available, people tend to have a lower demand for climate risk insurance. On top of that, both income and prices are found to be important determinants of the demand for insurance, and unaffordability is expected to become more relevant under a changing climate, and especially when premiums are consistently risk-based. There are also a few quote-unquote surprises. So despite the theory predicting that both risk aversion and ambiguity aversion should have a positive impact on insurance demand, the literature finds mixed results here. In particular, there are some studies that find that in the agricultural sector, higher levels of risk aversion are correlated with lower uptake of climate insurance. For the factors at the bottom, you see that I have described them not as positive or negative. I have described the effect not as positive or negative, but rather as expected, since, as I mentioned before, this depends on the baseline and on how the studies tend to approach the problem. These factors tend to be less explored than those above, and the majority of studies rely on experimental analysis rather than real-world observations. In addition, many of these papers do not investigate the factor as a barrier itself, but as a potential stimulus for uptake. So, for instance, research on the status quo shows that making climate coverage as a default in insurance contracts, as opposed to offering it as an opt-in component, increases penetration. This implies that today's status quo of having climate coverage as an opt-in component might be fostering the protection gap. Another element that appears from our literature review is a pretty wide consensus that there is the need for a greater collaboration between actors like multi-sector partnerships or public-private insurance schemes. Such collaborations are expected to ease the collection of financial resources to cope with extreme losses, as well as to foster adaptation and enhance the risk reduction capacities of insurance schemes. However, there are a number of barriers that limit the establishment of these collaborations. For instance, the unclear responsibilities of who is in charge for managing certain risks, and obstacles in sharing and sourcing information, for example, due to private protection issues or for the reluctance of insurance companies to share this information. This can create frictions and reduce the scope for cooperation. In addition, also the regulatory framework might limit cooperation from taking place. For instance, competition laws limit the ability of insurance companies to cooperate in fear that they might undertake potential anti-competitive behavior. Among the untapped potential for cooperation, it is suggested that insurance companies should cooperate with construction companies and incentivizing them to introduce risk reduction measures in their processes, in their projects, leveraging better insurance conditions as selling points. They should also seek closer collaborations with public administrations in urban planning, as Paul mentioned, and in the development of certificates or building codes, since this would reduce their potential exposure by ensuring that less property or fewer properties are built in risky areas. And also, in light of the fact that many of the better performing schemes tend to have some form of public intervention, several authors are calling for moving towards some forms of multi-layer public-private partnership approach with a clear attribution of risks and adaptation responsibilities to different actors. Another element that you've heard me mention several times is the one that refers to data availability and data sharing considerations. What emerges from the literature is that data on climate hazards tends to be pretty much readily available today. However, data on impacts is considerably less so due to the additional costs that sourcing and disclosing this information entails. In addition, impact data is also less standardized than hazards data. For example, there is not a data hub as the one that ILPA showed before, which further limits its usefulness. Therefore, there is the need for standardized procedures that enable the creation and periodic update of standardized data sets on impacts as well as hazard data. This calls for the creation or for the development of a climate risk data policy, which sets out clear rules, requirements, and limitations in order to maximize the access to relevant information, while at the same time ensuring transparency, affordability, and the protection of privacy. Therefore, I wanted to conclude by highlighting some potential for data innovation. This could facilitate the way in which insurance companies collect and process information, which can both improve the characteristics of insurance products as well as the customer's experience, thus helping to close the insurance protection gap. Drone imagery and satellite imagery can enable accurate and rapid data collection. This has the potential to lower operational costs since damage estimations can be done more quickly and relying less on the fieldwork activities of insurance agents. This translates to lower premiums and faster claim payments. On the one hand, increasing the attractiveness of insurance policies, and on the other hand, facilitating a faster recovery thanks to the rapid access to resources for reconstruction. Then blockchain and artificial intelligence can improve the underwriting process, allowing for a more accurate pricing of risk thanks to the ability to process large amounts of data. They also afford the opportunity to design and develop insurance policies that are tailored to the needs of the specific clients, and they can streamline claim settlements, again, ensuring rapid payments, improving customer satisfaction, and further reducing operational costs. All of these technologies can incentivize adaptation by enabling a more precise and effective risk assessment. In addition, they can be used either to improve the standard indemnity policies, but it can also be applied to develop new and effective parametric solutions. So this was everything for today's presentation. Here you can see an overview of the activities that we are still conducting within our task and that you can expect to find in the final version of the deliverable. I would like to thank you all very much for your attention, and we will now move on to the next phase of the workshop, which, as Ariane mentioned at the beginning, entails an interactive discussion based on your answers and inputs. Thank you very much once again.
Thank you so much, Stefano. And before moving on to the organized discussion, let me share my screen. So we have a question for you, actually. So first, we have a very simple question asking when the result of this review will be published. So Stefano, maybe you can comment on that.
Okay, so the final version of the deliverable will be submitted to the European Commission for review by the end of May of this year. So after the review by the European Commission, if everything is in line and they are happy with the results, the official results will be published after that. I don't exactly know the time frame for the review process from the European Commission. Maybe Hilpa can illuminate us on that procedure.
I can just say that when it's ready, then it's ready, and it will be on our web pages, and you can download it. Yes.
Excellent. Yeah, all the deliverables that are submitted and accepted are published on the PIISA webpage.
Yes, exactly.
And so we had a related question on which AI-powered search tool did you use, but I guess this will be displayed when the results are ready. So
I can clarify it here. It's Research Rabbit. It's an open platform tool. You just type researchrabbit.com, and yeah, it's free. It's free to use.
okay, perfect. So this is the link to actually some of the questions that we have prepared for the 100 people that are proudly connected today. So if you haven't used your phone to connect to the Menti, please do it now, because we're going to use this platform to as a support for discussion. So let me move slowly to the first question while everyone is connecting to the Menti. Can you still see the code? Can you see the Menti code displaying on the top of the screen? Okay, that's good. So the first question is an introduction, and actually it's good because we had a question on the chat regarding wildfire risk. Are we talking about a household level or forestry level? So this question is a bit more broader. It's about, with your own experience, which climate product is more critical? Is it for the public sector, for household, or for business level? So we're waiting a little bit more to collect answers. But I think meanwhile we wait for answers, it will be also interesting to hear Paul on this, because Paul Hudson, if you are still with us, I know that you work a lot on flood insurance and flood models for insurance purposes. And I will be curious to have your insights on which type of beneficiaries did you work with flooding models that you developed?
Mm-hmm. So while we're waiting for the responses, it kind of reflects the proportions of the responses we're getting so far, in that a lot gets put on households because they're the ones that seem to dominate the political discussion the most. So I'm not surprised by that. And in terms of the other two options, which one will be critical moving into the future, I think a lot of that honestly depends on where we're looking to deploy these insurance products. Because if we're keeping them here within Europe, odds are I would put more emphasis on probably developing business level climate related products and financial obligation support tools rather than the public sector, probably because the public sector in Europe, to varying degrees, if I listen to the British government, can probably support expenditure and recovery a lot more easier than some other countries on the planet could do.
Yeah, thank you so much, Paul, for sharing the insight. And I see that on the chat there is a parallel discussion on market penetration between Stefano and Pedro Pinejo. So maybe Stefano, would you like to comment on Pedro's question?
Yeah, sure. Pedro asked, how do we consider market penetration? And I interpreted it as the penetration of climate insurance products in order to produce the insurance protection gaps maps that we've displayed. So as I mentioned in the chat, there are various ways in which you can consider penetration rates or coverage. Several sources use several different methodologies. In our work, we have used mainly the information which is provided by the EIOPA in its dashboard. And this is in itself a combination of the information that they gather through many different sources. So I don't remember exactly in which way they combine this information and what they consider specifically to be penetration. So if it's total share of hazard of assets covered, total number of policies relative to the total number of potential policies that could be underwritten. But as I mentioned during my presentation, these are still qualitative estimates most of the times and not a precise estimation based on exact figures. And then in terms of the possibility to enlarge the framework to developing and emerging countries, this is absolutely very relevant and very interesting, since the biggest share of the insurance protection gap currently takes place in less developed countries, and these countries are also found to be those that are most at risk and that suffer the most for climate-related events. So conducting an extension of this analysis to include less developed countries is absolutely a worthwhile and required exercise that should be conducted in the future.
Yeah, and maybe this is also part of the answers that we will receive from the next question. So we wanted also to discuss a little bit more data availability. So in your presentation, Stefano, you said yes, on climate data looks to be quite fine, but on impact data, we see really a lack of availability. So if on your experience, you also have found these gaps, or maybe you have a different opinion, we'd be happy to hear you on this. So there is a new question on the Menti. Yeah?
Yeah, exactly. So loss data and impact data oftentimes is protected by insurance secret, is proprietary information. And so this sort of data is a lot more difficult to come about, since insurance companies market and make a profit out of this data. So they are a lot more reluctant to share this information. Another source of data which will be really important moving forward and in order to design more effective insurance policies is hazard data, but not based on current hazard, but based on the future climate conditions that we expect to find. Because if we want insurance policies to be adaptation enhancing, we can't base the policies and we can't base the way in which we price risk exclusively on past observation, but we have to consider how the situation will be in 25, 50, 100 years. And to this date, most of the climate insurance modeling still tend to rely on past hazard data and do not factor in climate change projection and predictions in their pricing. And this is actually something that will be addressed in tomorrow's presentation. So it is absolutely a worthwhile topic, and it will be very interesting to hear what our colleagues have found on that front.
Yeah. And so we actually received 21 suggestions and answers regarding this the type of data which is missing. So unfortunately, we will not have time to comment all the answers, but there is definitely some key topics that we see popping up from these different answers. On vulnerability, also, I'm quite happy to see that there is awareness on that we are lacking some nature-based solutions data to integrate this into insurance pricing. And this is also something that we will try to integrate into the PIISA pilots for forestry, at least, and agriculture, I guess. So this is really good. I guess one also element to gather all this knowledge is that we want to make a blog post. So in the blog post, we will gather all these answers that you have provided, so everyone also will have access to this content. So yes, a little question reflecting on that, actually. We are happy to have your insights on the type of data. If you are already using some impact data or data coming from the field for insurance purposes. So this first question is just a yes/no one. And obviously, most of the answers are no. And on the next question, we'll ask for the yes to maybe express themselves. So let's wait just a few more seconds before moving on to the yes explanations. Yeah, without a surprise, we see that the no is winning this yes no question. Okay, thank you so much for your contribution. I'm just moving on, be conscious of the time. Maybe what we can do is to keep some times for the next question. If you can just, for the one who answered yes to this former question, write us in the chat or in the Q&A Menti, so we can, also display the results for the blog publication to come. So next question is on AI. So we received already this question on the chat, and Stefano answers with the tools that we use. And regarding innovation, I think this is a topic that a lot of people are wondering. How useful is this for insurance today? How useful it will be in the future for insurance innovation? So from your own experience, again, maybe you are insurance stakeholder, maybe you have some ideas, even if you are not. So we're happy to have your views on if you'll be willing to use AI for modeling insurance products. And while we wait for the answers to pop up, hopefully we will have some answers. I'd be interesting to have the view of my colleague Amaury from AXA Climate, because I know that this is a topic that we have already been thinking about. And I think it's interesting
Yes.
to launch the debate. Yeah, Amaury, what is your opinion on this?
Yes, in AXA Climate, indeed, we use some machine learning algorithms, especially to assess the exposure of our clients, being public or private. Because, for example, we use image recognition through, using satellite images. We want to, for example, assess exactly what are the forests we want to cover against wildfire. So the forest, it's not that simple, because sometimes you cover a big area in a country, and some parts are buildings, some parts are forests, some parts are roads, some parts are lakes, and you want to have the precise sectors and the precise mapping of the areas to be covered, so that then we can use also satellite signals to be able to assess the burnt areas using infrared signals of the satellite. So that's an example. So most of the time we use that for the assessment and to get a quite accurate vision of the exposure of the assets we cover.
Maybe that's specific also to parametric insurance, where we can use AI more easily than with indemnity models.
I think that for indemnity models, you can, and I saw in my experience different examples where you can also use that for exposure, because you can have some images on buildings, in very large buildings. I'm not talking about kind of small houses, but in terms of buildings, to be able to assess what type of buildings, what are the components of the buildings, and based on that, to have a precise vulnerability curve of the building, depending on the perils you want to cover, and based on that, have a very have a better cover and a better accurate pricing of the insurance to offer to the client.
Yeah. So thank you, Amaury, for sharing your view and what you've been doing for some of the assets. So unfortunately, we won't have time to debate a lot of AI, but I guess this will be also discussed maybe tomorrow or for the next session workshop organized by PIISA. So one last question. So this is to prepare also for the future. We would be curious to have your insight if you are working on some of these 4 topics. So household, climate adaptation, clay soil shrinkage, forest resilience, or agriculture, because this is, as you might have understood now, the area of focus for PIISA. So this is interesting for us also to feel where the priority stands today for the one attending. So just waiting a few more seconds, and then we will conclude the session of today. So yeah, that's interesting, actually, reflecting on the discussions that we just had. So household climate adaptation seems to be a key topic for a lot of the person today. So thank you so much for contributing to this discussion. So to give you a little bit of overview of what's going on. So Hilpa, maybe you can quickly display the next steps for the project.
Yes, very quickly. So what I would like to highlight is that if you like to be involved as a pilot partner, please put it in the chat so we get the connection. But for the next steps otherwise, so tomorrow we continue with the next session with the climate risk models. Then otherwise, remember climate insurance innovations markets replicability will continue. Extreme climate indicators will be developed. Drought, severe convection, thunder, hail, so that we can also do that in climate scale for the future, not only for the weather. Then piloting further and applying lessons learned will be really the topic. We are very interactive. And in October, we will have an attribution of extreme events, collaboration, workshop organized, follow us. And next year, we will have a new round of this PIISA update on the workshops. And then otherwise, we will have these innovation cycles. So please just join.
And maybe I would like to finish to mention also other EU fellow projects that we have identified working on not necessarily insurance, but let's say climate adaptation. So what you see on the bottom of the screen, sorry, it's all the fellow projects that we feel PIISA is quite close to. Not all of them are there. Of course, there is Climate Fit, there is Soteria, and thank you so much, Mia, for your comments on the chat. Some of the team members are also part of other projects. So we wanted also to create, this sharing knowledge platform by promoting some of the events. So in May, we have 2 events that we have identified. There is a Finance Innovation Festival in Vienna, organized by the Naturance program, and there is a Climate Fit webinar, also in May. I can't remember, the 7th in May, so it's very close. If on your side you are participating some events that will come in the coming days or months, please don't hesitate to write it here, so we can also integrate this in the coming blog post that we are going to make. So this is the end of the session. It's 5 p.m. sharp. Thank you so much for attending. Again, don't hesitate to write to us, wrote on the Q&A Menti session, and we'll be happy to display all the results and content of today officially when the EU has approved the publication, and we will also provide some content on the blog publication to come in the coming weeks, and we see hopefully each other tomorrow, same time. Thank you all for your attendance, and wish you a good afternoon. Bye.
Thank you very
Good
much.
afternoon. Bye-bye.
Thank you.
Bye.
Bye. Thank you.
Thank you. Bye.
Bye-bye.
I see that.
Thank you.
I don't know. I see some hand raised,
Bye-bye.
but I think, yeah, maybe let's write in the chat. Thank you all. Bye.
Bye-bye.
We are still 9. Who would believe this?
It's still recording, you know.
Yeah, but I think it's Marguerite who he's handling the recording, and she has. Yeah, Marguerite, can you stop the recording?
Yes, I'm stopping it right now.
Thank you. Well, Stefano, he'll